Welcome to the Commercial Real Estate Report. This is the show that's here to empower you to build a generational wealth with real estate. I'm your host, Chris Berg. Our guest today is doing exactly what the mission of the show is all about. Now a good friend, and thank you, Lindsay, for introducing Don Clauson, myself. He is the CEO of Strat Property Management, extensive background in storage, tremendous success story. 80 facilities they now own and manage within California, Texas, and Colorado. And Don, it's just been a real treat and a pleasure to get to know you. So welcome to the show.
Thank you. Appreciate you having me on. And obviously, I'm not going to make a living in the technology business, so better stick with real estate.
Well, you kind of are, my friend, because you're managing your own stuff, so you guys are figuring out one way or another. But let's just start with your story. It was such a pleasure to meet you in Vegas. Very, very humble, and you were like, "Yeah, Chris, I kind of fell in this thing at storage." But I guess your story of success to inspire others, one, but also, there's so many different asset classes. Why self-storage, and what do you love about self-storage?
So much. And for me, it was a pleasure to meet you also. It was great to get to know you in our subsequent conversations. So the humility is not false. I was very fortunate to get into the self-storage business at the early time. And I started in 1992 as a self-storage broker. I represented buyers and sellers, and I fell in love with the business back then. And I know that sounds a little bit silly, but it's true. And the way that it took place is that we had listed a couple of self-storage facilities, and being well trained by the commercial real estate business, I went out to show these facilities to a couple potential buyers, and they asked me a series of questions where my answer was, I don't know. And after about the sixth time, I kind of crawled back to my car and I made a commitment to myself that it was a bold commitment that I'm going to know more about self-storage than anybody in this industry. I'm not going to have to say, I don't know. Let me assure you, well short of that goal. But I did just become a student of the industry. Had a couple of friends that owned self-storage facilities, and even though I was in the brokerage business, I would go and work at those self-storage facilities just to learn what the managers did. And as things went on and they had some success in selling the self-storage facilities, representing buyers and sellers, I had a goal that I was going to achieve, and that was to own a self-storage facility someday. And that was my goal. I learned somewhere along the way that it's probably a good idea to manage self-storage facilities for several reasons. And so we had some third-party we started a property management company. We had some third-party management. And then the dream or goal came true, and we bought a facility, and then had the good fortune of building another one. And that was first facility I purchased was in 1999, built one in 2000. And since then, a couple things. One is that I've learned that third-party management is not what we do. Although we still have 3 third-party management accounts, we've had them since we started the business in 99. And the rest of the facilities that we operate, we own. That's the short version.
There's so much you said there, but the one thing that really jumped out to me that I appreciated is, because I've had this happen in my life too, like when I was working with Tony Robbins, the first time I ever had to do a talk, it was the most embarrassing time in my life. And I was like, I'm never going to let that happen again. And it sounds like something similar for you when you were like, oh my gosh, that was embarrassing. I couldn't answer any of these questions. I was like, that's it. And then it was sort of a blessing in disguise, it sounds like.
Oh, it was the worst feeling leaving, but the best thing that could have happened to me, right? And by the way, I do it on a daily basis, even starting this show. Like, I'm embarrassed myself, but next time I'll know how to click on it, maybe. The questions they asked were, things that anybody that in the self-storage business should know. And although it's changed a lot, to say the least, since 1992. That I I don't want to put myself in a position to have to say I don't know that many times in a row ever again.
So well said. So I got to ask, I mean, in 1992,
Yeah.
self storage was kind of, and I say this in an enduring way, but kind of the redheaded stepchild of real estate, right? So, what made you fall in love with it?
So I'll say I always felt it was like the blue collar. That it was nobody really wanted that. That it was floated under the radar screen for so long. But it was a component of real estate. It wasn't fancy, and I fit the not fancy side of things in my life. And so there are the high-end apartments and medical office building, retail. Nobody talked about self-storage. And that was something that was very appealing to me. There was a pretty small market at that time. There were like 330 self-storage facilities in San Diego. So not enough to a broker to really make a good living. So expand to Orange County, expand to LA, expand through California,
Wow.
and so the things that I liked about it is most people didn't want it. People did not know about it. The returns were higher than anything else. Cap rates were higher, price per foot was lower, and there was so much opportunity in even back then in redemising units, changing the unit mix. Uh, you're not relying on any one customer. There's a retail component to it, but it's really the real estate business. I don't know if that makes sense, but that's what I loved about it.
Yeah, it does make sense. And I think I agree with you. The more that I'm around I'll say our community, you just realize how everyone involved, at least that I've had experience with, just very humble. Like, hey, look, I'm going out there. I got some real estate, but some of these people you wouldn't know if they have two nickels rubbed together. They probably have $1 million cash sitting in their pockets, half of them. So it's just a really unique industry from that perspective. Do you still own the site that you acquired in '99 and the one you built in 2000, or?
Absolutely. Yeah. 1999, remember it very well, still own it. And in 2000, the first facility we built, I still own that. Those are both in California. Uh, I stayed in California really through 2005. And 1992 was the RTC days. And, talk about a fascinating historic time in real estate. Um, 14 cap self-storage facilities, 18 to $25 a foot. Would have been great to just buy everything you could, right? And I did, which was nothing. But anyway, the people that bought those, obviously did very well. But the cap rates really have always been somewhere between four, as much as a spread of four. We're trending down these days, but there's been a difference in the cap rates. So in California, we got to a point that I wanted to continue to attempt to maybe get another one or two, and coming from days of the underwriting a bunch of these things and knowing that I don't work on projections, work on facts unless there's something really, really missing, something that's clearly you could improve upon immediately. And, California self-storage facilities were driving down to like a 7 or 8 cap, which obviously we would love to get now. But so we started looking around and looked in other areas and looked in just kind of did a tour. And I mean, from Las Vegas to Colorado to Kansas, I'm sure many other locations, and landed in San Antonio, Texas one day and thought, wow, this is a neat town. And we were fortunate enough to buy a self-storage facility there also.
And just so people can understand and appreciate what you're up to now, Dom, at least when I checked on your website yesterday, your goal was to buy one, and you now own and run and operate 80, correct?
Yeah, we do operate 80. Remember, 3 of those are third party. And let me be clear, I have partners in those deals. I don't own all of them. I have ownership in all of those facilities except 3. But yeah, it exceeded the goal for sure.
I was going to say it humbly, like, yeah, okay, Chris, I've done that almost 80 times over. So just congratulations to that. I would love to learn from you here. And again, you can share this to help other people learn as well. 2 questions in one. One, I would love to know, now, I know this is going to be a guess, but I can't wait to hear the number. How many deals, whether they be acquisitions or developments, do you think you've underwritten now for self-storage in your life? And when you go to underwrite something these days, like, what's your approach? Because what I found, Don, is like I played quarterback in college, and the more practice I get at underwriting, the more it almost feels like I'm putting together an offensive game plan, right? Like, okay, guys, here's the plays we're going to call. If they call this defense, I got to call this audible. Like, so I'm curious what your strategy is on that.
You're right. It'd be a pure guess as to how many deals I have underwritten, but certainly north of 1,500, and there is the great news is the numbers do not lie, right? Everything lines up. It's X number of feet, and the income is Y, and the expenses are what they have. Now, often, as I said, and so that would generate the net operating income that would help us determine whether it's something we can buy. Now, after looking at the number of facilities that I have, or anybody has really, you walk in like you're doing this now, and you're just seeing some things that, hold it, maybe we can do X, call this audible, and we'll run it a little differently. So sometimes you can just walk in and there's a quick change that could be made that could either increase income or lower expenses. That helps you be able to be a little bit more aggressive on pricing if you're attempting to buy. Often there is some glaring errors, and maybe you want to be more aggressive towards that. So did that answer your question? Or do you want to go to board?
I'm curious, like, for example, you and I chatted about this site in Chula Vista, right? And I think it's in Eastvale area. And so as you walk into a site, again, whether it's an acquisition or development, a couple like Chris Burnham at SSA, one of the things he mentioned that really jumped out to me, he goes, hey, I think the most dangerous metric people can use is square foot per capita when it comes to supply. And like, that was like, okay, that's an interesting paradigm. I'm just like, are you looking at square foot per capita? Is that one of your prominent metrics? Like, one of the things that we're looking at nowadays is, okay, what's the other dirt around our site that people could potentially build, and how much of a threat is that? So are you going through that process as well, or?
Absolutely. So I think that development would be a different conversation, but as the per foot per capita, I'm not sure what I mean. Like, Chris is a really bright guy, and so I would never second guess him. I still think it's a pretty critical, important factor. I think that maybe people aren't drawing from the same 1 and 3 and 5 mile radiuses that we used to talk about. Maybe it doesn't have to be Maine and Maine because of the way they were powered by the internet and how you drive people to your facilities. But I still think that we got to have the right number of people, because that statistic is actually almost scary accurate often. But as you go into a location, and if it's, everybody around you is 96 or 7% occupied, and there's a difficult location to build in, then that's pretty exciting. Now the question is how difficult and what else can be built. There's creative people like yourself that are, getting into this business and are maybe able to push things through that other people can't. But I think that anytime I'm doing it, I'm going to assume somebody else is going to have a way to either build another facility or expand theirs. And the opportunity that we talked about are the Chula Vista area, where that loved the site, and there were maybe some tweaks that could have been made to that particular design that I think would have been really positive. I think I have a more glaring example of a development opportunity that was the second or third facility we developed. And we still own that one also. But that one was scheduled to be about 50,000 feet. And there was a huge amount of export that in the dirt that needed to take place because it was on a steep incline. And because I had the pleasure or whatever we will call it of touring so many facilities, I had seen a facility like that built, and it was just did it, and they would make levels, and instead of export all the dirt, they used that to make all drive up facilities. So you'd go up to do a pad, up, drive it. So what I thought was really expensive dirt ended up being a great buy because we were able to get that and go in and build 120,000 feet of all drive up self-storage facility. That's turned out to be a fun deal. I think that those are the kind of that was an audible, right? It's just like, hey, there's another way to do this. I don't consider myself a developer like Chris Burnham or people in this industry, the Casters and StoreQuest or Westport. So many others just really, really are good at it. We just work hard and try to do the best we can do, but we don't build tons of facilities.
What do you? I'd like to get your take. You've been out in the business for over 25 years, so some of the most glaring changes maybe that you've seen over that time frame, and I think maybe more importantly, because I know you've got a great network of people that you communicate with, kind of a mastermind group. What are you hearing from them, or maybe for yourself personally? Like what's keeping you up at night about the future of this business?
Oh goodness, I wouldn't say nothing. This industry is changing so much. I mean, I gotta tell you, the blue collar, under the radar screen ended back in probably 2003 or 4, and I mean, it is a sought after asset class now, right? So it was over the last decade, I think, that the self-storage business has advanced and changed so much. And I say that over the last 5 years, it's 200% where it was a decade ago. It's going that much faster. So I think what keeps me up at night is what I don't know, and we're getting into a world of, the technology is becoming so important, and really, it's not where we get to just advertise in the yellow pages, make sure that you get something that starts with an A or buy a bigger, ad to get it in the early pages of the yellow pages. It's very, very complicated, very sophisticated. And then there's people like Lindsay who introduced us. I mean, right off the charts, she's going to go in and she consults with people on how to run their facilities better. that keeps me up at night a little bit, because she can help take away the any competitive edge that we might have. And I say that as a true compliment. She is a
Yeah.
great operator, a great person to ever have to work with. Um, the REITs are getting, you know, they're all bright. They're obviously very smart. They know exactly what they're doing. The way that they're changing rates now, and it's so dynamic, uh, has me shaking my head a little bit. And I know that, it's a longer term outlook, but if we drop rates too low, it's sometimes hard to get them back up to where we think they should be. Um, and it gets back to that basics of supply and demand, and some areas are overbuilt and some aren't. But I think the other thing is, in our business, you talk about, I do think just great people, right? And people are sharing. I also think that something that the self-storage industry, myself included, is, hey, when things are good, oh my gosh, we are the happiest, just pouting our chest type of a group about how great we are and how smart things are, and look at our business. And then when things change a little bit, there's a lot of gloom out there. I mean, we swing pretty hard. So this rough time we're in, I can tell you there's a lot of other real estate sectors that would love to trade places with us, which is another thing I love about the industry.
Very well said.
Thanks.
Yeah, I do want to get to when you think things start to shift, because I know it's been slow. You've had the low rates. No one's really moving. So I want to get to that in a moment. But first, one of the things that I continue to hear from people that I would say are kind of keeping people up at night is this ECRI situation with the REITs, and which I understand, hey, low customer acquisition costs, get them in, start to build the pricing up. But I think it's starting to put some people in our state capitals, and that makes people nervous, right? That was the one good thing about self-storage. It was like, no one's going to the state's capital and talking about self-storage. Right now, it's starting to kind of get in some ears, and you're like, no, please keep us away from any legislators.
Well, I think that we could say that about probably a lot of different aspects of life. But yes, one of the nice things is that you float under the radar screen. You float under the radar screen with regulators. Have to make a shameless plug for the SSA, the Self Storage Association, where we met, the CSSA, that where we're now both in California. The associations are so important to all of us, and they really, they really help try to get in front of bills, and to try to not allow us to be monitored the same way as, like the apartment industry. There are things coming in, and that it doesn't really keep me awake at night. I think that there will be stricter regulations, and I think that there will be some changes that are made. I think that we can do a lot to prevent it by just being good people, man. Just like, we talked about the auctions. Like, nobody likes auctions. We as owners, we don't want to sell people's items. We want to try to get their items back. Yet we charge a lot of late fees, and that's probably not a popular thing to say, but we do, and it's part of our business. So the state's regulated that. Actually, I think all of them have regulated it, but we should have self-regulated ourselves to a degree. And there's some other things that we could do to just not draw attention to ourselves. And again, I think that the associations get out in front of that very, very quickly, and they hear about it from either the big public REITs, because they get and they share that information, which is really nice, or a small operator that might get I mean, some ADA attorney might be chasing around trying to help their clients or extract money, one of the two. So the association does help with all of that.
Are you concerned at all about rental rate increase caps on that?
Yes, sure. Yeah.
Okay.
Uh-huh.
We'll leave it at that for now. Hopefully that doesn't come to fruition, but we'd love to get your thoughts on, as we mentioned a minute ago, it has been slower time in self-storage just because people aren't moving. The rates are really low. People are locked in. I don't know if you've seen this exact dynamics before in some of the cycles, but just your thoughts on what you're seeing right now and just really suggestions for operators about, hey, just be patient. We're going to get the other side, or what you might say something completely different.
No, I'm not. I like to say so what I would say is, let's have this conversation in 3 years. It is, be patient, hang in there. It might look like it's horrible, and maybe you underwrote a deal on some projections that aren't coming true, but we'll have the conversation in 3 years. And by the way, when things are great and flying off we cannot like make more space or raise rates any higher. Have the same thing. Let's have the conversation in 3 years. There's been too many cycles, and we've never seen one like the RTC. It's kind of the craziest thing, but depending on who you listen to, we've gone through 4 at least. I don't think people will argue with that. And there's always been something that has a little bit of a twist to it, but it took it from where you were thought that you had this great investment, and it changed. Either the cash flow lowered, the occupancy decreased, the rents decreased, expenses increased, property taxes came out of nowhere. That's in Texas, not California. We know how that works. But the basics, the fundamentals of self-storage continue to come through. People like to keep their items, and there's all types of different reasons people store besides the big 3Ds. It is fascinating why people use self-storage units, and I think that's going to continue for a long, long time.
Don, it's really amazing to me, and we've talked about this, but just the humility in this industry, you yourself, extremely humble with your experience and success. And so I'm curious for people out there that maybe have been in the business for, say, 5-10 years, maybe they're brand new. Like what's the top 1 or 2 things you would share with them as they embark on this journey, getting into the self-storage industry?
I would say to get involved, give something back to a local association, the state association, know other people in this industry, and without any anti-collusion, like share information, have a conversation like we're having. My formula is work hard and be consistent. I wish I had some magic to share, but I don't. It is just to be thorough, be diligent, and be good. Like, I don't try to take it. Like, I don't take advantage of people. I don't get advantage of. The industry is open and will continue to share. There's if there's the opportunity to build, like you and I talked, we could be considered competitors, right? We're just friendly people in the same business, and I will continue to share information like that, and without just nothing to gain and nothing to lose. So I guess that it was a really long way to answer your question. Meet people like Lindsay, meet people that are really involved in the industry at all different levels. I mean, assistant managers, maintenance people, man, they know things that we'll maybe never know. Very, very smart. And then get the chance to talk with somebody like yourself and Chris Burnham, or many names of people that just understand this business, and then put your own twist on it. So that's the best advice I think I could give.
Thank you. I think you nailed it from just kind of the basic golden rule. I think Sam Zell said it well, and you sort of alluded to this, is Sam would always say, hey, I'm going to keep a little bit of meat on the bone because I want to continue to do deals with those same people, right? If I take all the meat off the bone, they don't want to do any more deals with me. So keep some meat on the bone. But I really appreciate what you said about, do the work and do it consistently. Like there's no way, which I wish you could take your 1,500 underwritings and just like implant them into my brain, but you can't. And so I need to just do the work, right? I need to get up and every day and just continue to, okay, what's a better strategy to underwrite these things so that we can do more deals? So it's just, as much as people want to try to replace it, you just got to do the work. So I said we were going to do 30 minutes. It's already flown by that. I want to be respectful of your time. I do want to give you the last word. Anything else you want to add or share that I haven't asked you, Don? And most importantly, if people want to reach out to you, how can they do that?
I'm sorry, what was the say? If what, reaching out?
Just if people want to reach out to you, if you're open to that, if they can, and then
sure.
anything else you want to add or share?
Yeah, I guess that I'll provide information if people want to reach out. Real quickly, you don't want 1,500 of thoughts, my thoughts downloaded into any brain, but you're right that there's you take that, put a little different twist on it, do yours. I don't think so. It's a great industry, great people, and I thanks for having me on. I did enjoy it, appreciate it very much.
Oh, it's been great. I'm so grateful for you, taking the time. I know you had other things to do, so thank you. And it's just been a real pleasure to get to know you. So I'm grateful that, like I said, Lindsay connected us, and I look forward to many more of these, whether they're on camera or not. Okay.
Yeah, probably off camera is a good idea, huh? Thanks so much.
Thank you, Don. Have a great day. Again, this is
have a great day, everybody.
Commercial Real Estate Report, empowering you to build generational wealth with real estate.